Ladies and gentlemen, today I would like to delve into an important aspect of investing in physical gold, the concept of short term volatility and potential transaction costs associated with gold prices. When we say that gold prices can experience short term volatility, we are referring to the fluctuations in the market value of gold over relatively brief periods, such as days, weeks, or months. Gold, like any other commodity or investment, is influenced by a multitude of factors that can cause its price to rise or fall in short term. These factors include economic indicators, geopolitical events, market sentiment, and investors' behavior. Allow me to provide you with some detailed examples to illustrate this concept. Imagine a scenario where positive economic data is released, indicating robust economic growth and increased investor confidence in other assets, such as stocks. In such a situation, investors may shift their focus away from gold, leading to a temporary decline in gold prices. This short-term volatility can be attributed to the dynamic of interplay between investor sentiment and changing economic conditions. Conversely, let's consider a different scenario. Suppose there is a widespread economic uncertainty due to geopolitical tensions or concerns about stability of the financial market. In times of such uncertainty, investors often seek the perceived safety and stability of gold as a store of value. This increase in demand for gold can drive its price up in the short term, reflecting its role as a hedge against economic uncertainties. It is important to note that short-term volatility is a natural characteristic of financial markets, including the gold market. It reflects the ongoing dynamic between supply and demand, investor sentiment, and changing economic conditions. While short-term price fluctuations can present opportunities for traders and speculators, they can also create uncertainty for long-term investors. However, it is crucial to distinguish between short-term volatility and the long-term trend of gold prices. Over extended periods, gold has historically demonstrated its ability to preserve value and deliver consistent returns. It acts as a store of wealth and a hedge against inflation and economic uncertainties. Investors who focus on the long term and have a diversified investment strategy are generally less affected by the short term price swings and benefit from the enduring value of gold. Now, let's turn our attention to potential transaction costs associated with gold. When buying or selling physical gold, investors may incur certain expenses related to transactions. These costs can vary depending on several factors, including the type of gold product, the dealer or broker used, and the prevailing market conditions. One aspect to consider is the premiums associated with physical gold. The premium is an additional amount charged above the spot price and converts factors such as fabrication, distributions, and dealer profits. The premiums can vary based on type of gold product you're purchasing, such as gold coins or bars, as well as the brand or rarity of the item. It is important to compare premiums across different dealers to ensure you are obtaining the best value for your investment. And trust me, SD Bullion, JM Bullion, and many others have many different prices. Additionally, investors should be aware of fees and commissions associated with buying or selling physical gold. These charges are levied by brokers or dealers for facilitating the transactions or credit cards. The fees and commissions can vary depending on the size of the transaction and the service provided. It is advisable to compare fees and commissions among different brokers or dealers to ensure you're getting the most competitive rate. You can also see the payment options, what's better. Furthermore, it is crucial to consider the potential costs associated with storing physical gold. If you choose to keep your gold in a secure vault or storage facility, there may be fees for your storage and sometimes insurance. This cost of storage can depend on factors such as location and reputation of the facility, as well as the quantity of gold being stored. These costs should be factored into your investment decisions-making process. To illustrate the impact of transaction costs, let's examine an example. Suppose you want to invest $10,000 in physical gold, purchasing gold bars with a premium of 5% and incurring a transaction fee of 2%. In this case, the premiums will amount to $500 and the transactions fee would be $200. Thus, your initial investment will effectively be reduced to $9,300. It is crucial to consider this cost when calculating your potential returns on investment and how long you'll probably have to wait until you can get money back. In summary, we talked about gold price experiencing short-term volatility. We're referring to the fluctuation in market values over relatively brief periods. Short-term volatility is influenced by various factors and is a natural characteristic of financial markets. It is important for long-term investors to focus on the enduring value of gold and not be swayed by the short-term price swings. Moreover, potential transaction costs, including premiums, fees, and commissions, should be taken into account when buying or selling physical gold. These costs can vary depending on the type of gold product, as I said before, the dealer or broker used, and prevailing market conditions. Storage costs should also be considered if you're up to secure your gold. As with any investment, it is crucial to conduct thorough research, seek professional advice, and align your investment strategy with your specific financial goals and risk tolerance. By understanding the dynamic of short-term volatility and considering potential transaction costs, investors can make better informed decisions and position themselves to benefit from the long-term value and potential growth that physical gold historically offers. Disclaimer: the information presented in this video is for educational and informational purposes only. It does not constitute financial advice. Investing in physical gold or any other financial instrument involves risk, and you should conduct thorough research, as I mentioned before, and consult with a qualified professional before making investment decisions. I am not a financial advisor. Thank you for your attention, and may you make your informed decisions to secure your financial future. If you like this video, please like and subscribe and comment your thoughts, and may you have a great day.